All right. Today is Wednesday, March 9th, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight, so let's start with this. Happy rebound day. The plunge is finally working, but is it gonna stay? Or is this another bull trap, another dead cat bounce? Before we answer that, it is highly critical that we understand what we're doing here. Every day, the market speaks to us. It drops hints, clues, pieces of the puzzle, and it's our job to put on our detective hats and piece the pieces of the puzzle together. Now, I am aware that some of you skip parts of the videos pretty much every single day because you think it's not important, it's just repetitive, I'm just reading a bunch of data, but you're missing on my analysis because we pieced a bunch of puzzles yesterday, and it became evident that the rebound is getting closer and closer and closer. Take a listen to certain portions from yesterday's video and how I started spotting the upcoming rebound ahead of time. We're seeing a change here. Cyclicals moving higher, technology moving higher, financials moving higher, materials moving down, defensives moving down, utilities moving down, REITs moving down. What does that tell you? The market is ready and primed for a change, meaning finding a bottom and rotating to the growth trade once again, the cyclical trade once again. But energy remains a problem. Why? Why is energy continues to lead? Because crude oil prices continue to move higher. So this is the sticky point for the bulls to initiate a rally right now. What about the ticker NVDA NVIDIA? Pay attention here. Palladium almost went down today, and they were buying some SMH calls yesterday on the semiconductor ETF. This is a short-term trade with only 3 days till expiration, so they're betting for a bounce. I'm seeing this theme yesterday and today. They're betting for a bounce on the losers, NVIDIA, the technology software names, the winners of last year. So this is a bet for an expectation of a dead cat bounce, a bear market rally, an oversold rally, whatever you want to call it. But I'm seeing these bets increasingly right now. It is really interesting. The winners today were the cyclicals, cruises, hotels, casinos, airlines, Caterpillar, the financial names, not all of them, but the regional banks performed today. Some of the software names, chips moved higher. They were significantly higher midday, and then they started to sell off again. The only sticky winner that also won today is energy. Chevron specifically was up over 5% today. So are we seeing the beginning of the rotation from winners to losers? Perhaps, but we have to confirm that with the fundamentals. We have to see oil prices down. We have to see palladium, wheat, gold, the dollar, all going down. Absent of that, we have to assume that what we saw in the last few weeks will continue to go on. IWM leading the gains versus the Qs, the SPY, the Dow. The IWM is a leading indicator. So this begs the question, are we going to see the rotation from value to growth? Rotation from the recent winners, the recent losers. Look at the XLP, consumer staples, down big, over 2.7%. Value was down, so was growth. But growth outperformed value today. Is this a leading indicator to what's about to come? We'll see. So again, if you've been skipping parts of the video, I feel sorry for you. You're missing on the real gravy. But anyways, look at the Russia-Ukraine indicators today. And just a reminder, what are these indicators? We have palladium, we have oil, we have wheat, VIX, RSX, and gold. Of course, the RSX is not trading anymore, so we're going to replace it with the dollar because you can use the ruble, but it's easier to use the US dollar. When these indicators move higher, it means that we have risk off in the stock market because the tensions between Russia and Ukraine is flaring up. And again, it doesn't really matter what's going on in the ground. All what matters is the market's interpretation of these indicators and what's going on in Russia-Ukraine. When these indicators move higher, then we have risk off and equities go down. When these indicators go down, then we have risk on and equities go higher. Today, palladium was in the green, but it was down significantly from the pops that we've been seeing recently. Oil was down big, wheat was down big, the VIX was down, the dollar was down, gold was down, and hence, we finally have the risk on, sell the winners, buy the losers, the rotation that we've been talking about. And the clearest illustration of the rotation today was the contrast of performance, let's say, between Bumble and Mosaic, a recent winner, Mosaic, and a recent loser, Bumble. I should have used Chevron or Exxon. That would have been a better example, but look at Bumble's chart, for example. The RSI was way oversold, and it was primed for a rebound. Once we lined up the conditions for a rebound day, with oil being down, palladium down, wheat down, dollar down, gold down, VIX down, you see a massive pop higher. This is what we call a bear market rally. They're impulsive, they're strong, they're powerful, but they don't last for too long because they combine a lot of short covering, they combine a lot of FOMO, they combine a lot of options market activities. So we tend to see these massive pops in bear market rallies. On the other hand, let's look at Mosaic in this case. The name was down big in the morning, but look at where the RSI was trading to begin with. It was already overbought, quote unquote, meaning it was begging and begging for a correction, for a drop. We got the drop today, but the demand is so high in Mosaic, they bought the dip right away. It is a winner. It will continue to be a winner, but you gotta read the psychology too before you hop in and buy Mosaic because you have FOMO. You missed out on the rally and now you wanna hop in. What is the psychology here? If the rally in the losers, the oversold names, continues to go on for a few days, you're going to see a lot of winners in Mosaic who bought, let's say, in January, in February, in the beginning of the month, March, taking some profits and buying the dip in the losers. And we will see the losers moving higher again and Mosaic cooling down. So is it time to buy Mosaic right now? My hunch is you're gonna get a better price. Wait for the profit taking to happen, and then you hop in and you buy the dip. And to begin with, we already had some decent indicator suggesting that we're primed for a rebound rally. Among them, the backwardation of the VIX. As you can see, every time in the 3-month versus the spot VIX, we call this the backwardation. Every time we get in these extreme readings to the downside, we get a bounce in the stock market. This is not the most extreme reading. It could go a lot lower, but when you get to this territory and you made a lot of profits shorting stocks or riding the agricultural, oil, gold, the recent winners, you want to rotate. You want to start thinking about a rotation. Unfortunately, all of that will be transitory. We have the CPI tomorrow. This pop could end by tomorrow because bear market rallies don't last for too long. I'm not saying it's going to end tomorrow because we have a lot of short covering to happen, but I'm saying it's going to be transitory, absent of the fundamentals changing. What are the fundamentals we're talking about? Inflation, the Fed's policy. Until we see inflation cooling down and the Fed becoming less hawkish, this market is not a buy in the long run. It has to take out a lot of air out of the bubble. Now, the bulls would argue and say, we've already made a lot of progress of taking air out of the bubble. For example, look at the best PE ratio for the Nasdaq 100. We're back to pre-pandemic levels. Here's the problem. This is a lagging indicator. You're assuming that the earnings that we got in the previous quarters, specifically in the most recent quarter, will hold. You're not factoring in peak earnings. Forget about peak inflation. What about peak earnings? What if we're about to see massive slowdown because at some point inflation, it started out in the honeymoon phase where everything is hunky-dory. We're getting paid more. Companies' profits are expanding. And then the ugly side of inflation starts to creep in, crushing the purchasing power of consumers and hence crushing the profit margins of these companies. So you have to assume that we are at peak corporate earnings. And if we are, then the market is not cheap yet. For example, another way we can look at the yield curve as a recession indicator is inflation expectations. And as you can see, the 2-year break-even inflation expectations is higher than the 5 and the 10-year. So we're already seeing an inversion in inflation expectations. What does that mean? We're getting closer and closer and closer to a recession. You think a recession will support corporate earnings? Of course not. So you got to keep the long-term picture and understand that, but also be an opportunist and understand the short-term picture and these bounces and pops that we get from technical basis. And this sums up the day perfectly. What kind of day did we get in the stock market today? This is what we got. The headline reads, BMW recalls 917,000 vehicles. The stock pops anyways. In these bear market rallies, it doesn't matter. We have the tide that lifts all boats. If we have a technical rebound based on oversold readings, everything is going to march higher. Everything is going to pop higher. Everything that is oversold, regardless of the fundamentals. Did I catch the rebound rally? The answer is no. I missed out. Somebody asked me yesterday, what are you doing right now? Because the market was a roller coaster ride yesterday. Up, down, and this was my answer. I closed a bunch of Q's puts, and that's all there is. Not doing anything at all. Not buying, not shorting. I might have some puts in certain names that I own, but that's about it. So if you feel bad about missing out, your boy you're listening to right now also missed out on the rally today. But there are many trades to come, to the upside, to the downside, because there's going to be a lot of meat in the bone for you and I to chew on. But let's play a game here. Grab your tinfoil hats and let's do some conspiracy talk. Today, we saw the biggest drop in oil on record. Once again, the biggest drop from an intraday perspective in history. How did that happen? Well, we have an oil embargo in Russia and a massive shortage of supply, and oh, by the way, massive inflation that is going on across the board. I don't deny the role of manipulation. Of course, there is manipulation. The administration looks bad right now. They placed an oil embargo. Everybody's blaming them for higher gas prices. They're dubbing this inflation as the Putin price hikes. What a joke. You think we're stupid? We know exactly who's responsible for this inflation, and we will make our voices heard this November. Make no mistake about it. In the meantime, the administration, the plunge protection team, the guys in the shadows, the guys with the funny masks, it doesn't matter what you call them, might have initiated something funny. Because we got a lot of fake news today. Fake news number one. They said the UAE is now convincing OPEC to increase the output. Fake news number two. They said Iraq, because Joe Biden is in a begging tour, the Beg for Oil tour. Grab your tickets. We have Venezuela, we have Iran, we have Iraq, UAE, Saudi, all over the place. Joe's begging, but not Texas for some reason. And perhaps Iraq responded and said, you know what, we're going to increase the output. Joe asked, he begged, and we're going to grant the request. And of course, all of this turns out to be fake news, because we know ahead of time that Saudi and the UAE already declined even to talk with Biden. They're not even talking with the guy, let alone increasing the output of oil. And then came the confirmation of the fake news from Iraq, because the Iraqi minister came out and said, whoa. We did not say anything about increasing the output. Matter of fact, we think the supply and demand is balanced right now. There is no shortage in the market. The market is fine. We're not going to increase the output one way or the other. So we know all of this was fake news by whoever. But here's the thing. It doesn't matter to me what the manipulation efforts are, because the technicals speak the loudest in certain days. And today was one of those days. Right off the gate, 6:50 a.m. Pacific time, I tweeted this. If the WTI can hold the double bottom at 115.52, it will rally again and equities will reverse their gains. And of course, vice versa. So what happened with the WTI? As you can see, 115.52. This has been an important line as resistance and again as support. Once you lose that support, the flush down happens right away. And we now have a bear flag formation. So again, you could say it's the tinfoil conspiracy. You could say it is the technicals. You could say it is traders taking profits and rotating. It doesn't matter. The end result is the same. And of course, we have more good news for the Nasdaq after hours, because Amazon is now splitting the stock 20-1 and adding $10 billion in buybacks. But somehow they cannot find money to pay taxes. Anyways, this will excite the sheep and the likes to buy Amazon, and this will support the Nasdaq higher. Amazon will be a leading indicator tomorrow. If Amazon pops higher in the morning and then we see a gap and crap, run for the hills, the pop is over. It was a dead cat bounce. So all eyes on Amazon tomorrow. And by the way, you see the divergence between the stock price and the average analyst price target. This is the widest divergence in a long time. Of course, the analysts are always wrong, but this is a massive gap. If history is right, the stock should be trading at around 3,500 or so. But again, the fundamentals matter more. Once Amazon reports earnings, if their margins are getting crushed, the stock will go down. It doesn't matter what the analysts are saying. And by the way, congratulations to whoever bought the $21 million worth of Amazon call options today, with the expiration of, you guessed it, this upcoming Friday. Very impressive. Right, Nancy? Anyways, let's move on to cover the market information for you, and we start with the performance of indices today. And here we go. The Dow Industrial Average closing in the green big time by 653.61 points, or a gain of 2% even. The Nasdaq leading the gainers by 459.99 points, or a gain of 3.59%. The S&P 500 also in the green with 107.18 points, or a gain of 2.57%. What about the sector's performance today? Leading the pack at number 1, capturing the gold medal, technology. Number 2 for the silver, communication services. Number 3 for the bronze, consumer cyclicals. And the laggard of the day, energy. This was the resolution that the bulls were waiting for. The drop of energy and the rotation from Exxon, Chevron, Pioneer, Marathon, Occidental to who? To the laggards. Technology, software, financials, etc., etc. What about the advance to decline ratios? NYSE 77% advancing versus 19% declining. The Nasdaq 79% advancing versus 16% declining. We look at the 52-week highs and lows for the Nasdaq. It is still negative, of course. We are in a bear market after all, but the breadth is a lot better than the previous days. That tells you that this bounce could last for a few more days. Absent, of course, of the CPI ruining the party. Moving on to commodities. A massive drop for oil. WTI down over 11%. Brent down over 12%. Joe is happy, at least today. Gasoline down 10%. Heating oil down big, over 20.5%. While natural gas pretty much in the flat line. Softs, red across the board with exception of cocoa, gaining a little over 1% today. We have cotton pretty much in the flat line, yet we have massive declines led by lumber, OJ, sugar, and coffee. What about metals? Down big. Gold down, silver down, platinum down, copper down, but palladium still on the flat line. This is the only worrisome sign for the bulls today. Why wasn't palladium down? Maybe it's going to be down tomorrow, who knows? So watch out for palladium. But these are massive declines, over 4.5% for platinum, almost 2.5% for gold, almost 3.5% to the downside for silver. So this was yet another confirmation that equities will move higher. What about meats? Feeder cattle pretty much in the flat line, while we have declines led by the new big tech lean hogs. If the Nasdaq is performing, the new big tech is not going to perform because all new tech is performing. So lean hogs is down about 2%. And live cattle was down around 1%. Lastly, what about grains? Red across the board. Most importantly, wheat. Wheat was down over 6.5% today. This is yet another confirmation that equities will do a lot better than the last few weeks. We also have corn down, soybean oil down, canola down, soybeans down, oats down, with the exception of soybean meal. The winner of the day barely in the green. Moving on to the big casino, the options market. What's going on here? Apple, the hottest table by far, with around 1 million contracts traded today. About 58% of those were calls. Tesla, the souffle number 2, with about 600,000 contracts. About 55% of those were calls. AMD at number 3, with around 450,000 bets today. About 67% of those were calls. Moving on to the unusual activities that took place in the options market today. What about the ticker VALE? A recent winner, big miner from Brazil. You want to buy the dip in these names, but again, give them a little more time. Somebody's already buying the dip here via call spread. They're buying the 21 calls and they're selling the 23 calls, all for the expiration date, April 14th, with expectations that Vale will rebound higher by more than 12% by then, but not more than 23%. They paid around 40 cents a piece for buying the 21 calls, and they received around 15 cents a piece from selling the 23 calls. All in all, they paid about 25 cents a piece to enter this trade, all in all spending about $650,000. What about the ticker FEZ? Busy today. A lot of trades for this ticker. FEZ, of course, for the European ETF. The DAX was up 7% today. This is a classic bear market rebound. Yet somebody's fading the rip here by buying the 35 puts for the expiration date May 20th, with expectations that the FEZ will drop down by more than 12% by then. They paid about $1.20 a piece to enter this trade, all in all spending about $3 million. What about the ticker IWM for the Russell 2000? They're fading the rip again by buying the 180 puts for the expiration date March 25th, with expectations that the IWM will drop down by more than 10% by then. They paid about $1.20 a piece to enter this trade, all in all spending about $1.3 million. What about the ticker NOG, Northern Oil and Gas? A loser for the day, a winner for the year. Somebody's buying the dip right away by buying the 27 calls for the expiration date April 14th, with expectations the name could pop higher by 7% by then, and they paid about $1.50 a piece to enter this trade, all in all spending about $1.7 million. And what about the trades for the ticker SPY? We have a put spread here. They're buying the 400 puts and they're selling the 390 puts, all for the expiration date April 22nd, with expectations that the SPY could drop down by more than 6.5% by then, but not more than 9%. They paid about $8 a piece for buying the 400 puts. They received about $6 a piece from selling the 390 puts. All in all, the entry cost is around $2 a piece. That brings the total all the way to $1.5 million. What about the ticker DKS, DIX? Popping higher today, big time. Somebody's betting for more gains to come by buying the 120 calls for the expiration date April 14th. With expectations that the name could pop higher by more than 10% by then. They paid about $3 a piece to enter this trade, all in all spending about $2.2 million. Lastly, what about the ticker VXX? This is the VIX proxy. They're buying the 21 puts for the expiration date April 8th with expectations that VXX will drop down by more than 22%. So they're betting that the rally in the SPY will continue, and therefore they're shorting the VIX. And they paid around 50 cents a piece for this trade, all in all, spending about $375,000. Moving on to the heat map analysis, what's going on here? We have the tide that lifted all boats, with few exceptions, of course. Mainly the recent winners. Energy down big, Exxon, Chevron, Pioneer, all of them are down big. Then we have gold. Gold down big. All of these miners were the leaders, the winners, as of late. Today they're down. A name like Vale is down again. The agricultural names, the fertilizers, they were not down big, but again lagging the rest of the market. They're not rallying higher. Like Microsoft, 4.5%, Google, 5%, Nvidia, 7%. These are big-time gains. A classic oversold rally. We also have recent winners who are losing today. Look at the ticker NEE in utilities. Next Era Energy down by around 2%. The defense contractors, Lockheed, Northrop down. Not really down, but pretty much in the flat line. Another recent winner is railroads. Union Pacific pretty much flat. CSX down. Look at ADM in defensives, a recent winner, also down. Kroger, the ticker KR, a recent winner, also slightly down. So here's how you read the tape. Of course, we have a rotation from energy to the losers. But again, there are people waiting in the sidelines to buy the dip in energy. Exxon goes another 5% tomorrow. You bet your ass somebody's going to buy the dip. But here's something important. Look at Kroger. Look at Mosaic. Look at UNP. Look at Lockheed, the recent winners. Are we seeing massive losses today? Not really. What does that mean? We have yet to see the rotation from these names, or I should say out of these names. And perhaps we will not get a rotation out of these names. Perhaps they'll cool down for a little bit, and then we'll see more dip buying in these names. Then you look at the heat map, all in all, and you see the tide that lifted all boats, the good, the bad, the ugly. What does that mean? In the next few days, we will start to comb through this action that we got. Who deserves to be up and who deserves to be down. And what you're going to see, perhaps in the next few days, maybe a few weeks, that we're going to rotate back into energy, into defense, into ADM, into fertilizers, into Kroger. And we will take profits from the high beta, high multiple names that deserve to be down. The snowflakes of the world, the data dogs of the world, the Twilliers of the world. These pops are not going to last because, keep in mind, we have a problem we call inflation. And inflation will force the Fed to tighten the policy, the monetary policy, and this will hurt these names once again. That doesn't mean that you have to short right away. You got to wait for the oversold conditions to be worked out, wait for a reversal signal, and then start shorting again. Likewise, don't be a dummy and buy the dip right away in ADM, Kroger, fertilizers, because they might go down a little more. You might see more profit taking in the days to come. So if you're going to buy these names, have a little strategy behind you. For example, you buy the name and then you sell upside calls. Or you buy call spreads if you're just trading options. If you're really interested in buying the stock, you might want to sell a put. And then if it goes below that, you have a decision to make. You exercise and buy the stock, or perhaps you see more losses to come, maybe better prices. So you close those contracts and no harm done. Moving on to the heat map for the ETFs. Again, the tide that lifted most boats, not all of them, because we have energy down. We have the inverse indices down, the VIX down, gold, silver, oil all down, GLD, SLV, OIH, GDX all down. Which ETFs are leading the gains? Number 1, growth, the IWF, outperforming value, VTV, IWD. Number 2, we have chips. Look at the SOXL, over 12% gains today. And then when we look at international markets, it is the European stocks, the losers as of late, that are bouncing higher. The problem for European stocks is the following. Yes, they became way oversold, but they're still in bear market territory. So they could bounce today and then fade out right away by tomorrow. These are bear market bounces. So do you really want to buy European stocks right now? Of course not. This Russia-Ukraine thing could really escalate. We could see Russia cutting gas supplies to Germany. We could see more escalation by more parties joining the war. And mind you, we have the price caps in the UK. Once these are lifted, we're going to see a massive crisis. So you want to fade the rip in European stocks, at least for now. What about Asia? The interesting ETF for now is the Taiwanese ETF. Why are we paying attention to Taiwan? Because the invasion of Ukraine, of course. And how would that impact Xi Jinping's decisions regarding Taiwan? When we look at the Taiwanese ETF, for example, and this is the ticker EWT, it was in the green today, but look at the massive outflows as of late. This is really alarming. This is the biggest exodus out of Taiwanese stocks that we've seen as of late. Are they predicting an invasion of Taiwan? Certainly something you want to think about. And then we have Latin America. Let's look at Latin America. We have Brazil, we have Peru, Mexico, Chile, Colombia. These are the inflation rates. Now, look at all of them. Which one is peaking when it comes to inflation? The answer is, it looks, at least for now, that it is Brazil. Brazil was already in an inflation crisis, a stagflation crisis last year, and matter of fact, dipped into recession last year. So we're seeing the worst behind us when it comes to Brazilian equities, and therefore the EWZ remains the outperformer in international ETFs, at least so far. Moving on to the charts analysis, we start with SPY's chart for the S&P 500 30 minutes perspective. A gap higher. This is one way you can defeat 422 as resistance. The chart tried over and over and over again, it failed. One way you can cheat that is a gap higher in the morning. We saw a build on, some buying, a pickup of the pump in the morning. The problem is, this is for now a dead cat bounce until and unless the SPYs recaptures 430 as support. Because if that happens, you have a higher low. We can play with that. We can say that the worst is behind us, and perhaps we will see a relief rally that continues for a few days, maybe a few weeks. It takes us all the way to 443, maybe above that. But absent of recapturing 430, who's to say that this is not just another dead cat bounce, another bull trap? And the reason is, it is a double-edged sword. Let's look at the daily chart for the continuous contract for the SPY. The volume today was way below average, and we know it was on the buying side. The bulls could look at that and say, hey, look, the worst of the selling is behind us. But the bears would argue and say, wait a minute here. There is no conviction in this bounce because the volume is below average. If it was buying on higher than average volume, then we're talking. But this is not a reliable bottom yet because we have a lack of conviction. For now, the bulls made some tremendous gains, mainly the recapture of 4,232 as support. The momentum indicators are curling the way higher, but they remain closer to bearish readings. So we say the bears are still in control, but the bulls are fighting back. How do we know that we have a bottom, at least for the next few weeks, if not months? If the chart recaptures 4,384.5 as support, because the chart tried over and over and over again to do exactly that, and it was met with failure. If this attempt is met with success, meaning the chart trades above 4,384.5 and it recaptures that level of support, then psychologically speaking, the chart is saying we found the buyers. We made a higher low, and the buyers took us all the way above 4,384.5. But absent of that, who's to say that this is not yet another bull trap, another dead cat bounce, bear market rally, whatever you want to call it? Moving on to the Q's 30 minutes chart. What's going on here? Similar story, a gap higher and a build on all the way till the end of the day on lower than average volume. The good news for the bulls is we now have 334 as support. The bad news is it was on lower than average volume, and we're getting closer to overbought territory on the RSI. We're not going to have conviction that this chart has bottomed until we see 343 as support, solid support, a break above, a retest, and a bounce. Moving on to the daily chart for the continuous contract for the Nasdaq. We bounced from target number 1, which is the yellow trend line, and so far this is holding. The Nasdaq made significant gains today. Number 1, it recaptured 13,300 as support, and on top of that, 13,599 as support. These are massive gains. The momentum indicators are curling their way higher. The problem is the volume dilemma. The bulls will look at this and say, look at this. The majority of selling is drying out. The bears would argue that this is just another indicator of lack of conviction in buying, meaning the majority of buying happened via algos. We're not going to have conviction that this chart is out of the woods until it recaptures 14,000 as support and closes the week above that level, then we know we have a solid, reliable bottom for now that we can play with for the next few weeks, perhaps next few months. What about the IWM small caps, the Russell 2000 30 minutes chart? Again, the cheat happened. We couldn't make it organically to break above 196.5. Here comes the cheat, and now we have a bullish consolidation, perhaps eyeing 204.5. If we flush down, then the likely target will be 196.5 and closing the gap. The bulls would look at the action today and say, what if this is a reverse head and shoulder formation? We will see more gains to come. The bears could argue and say, wait a minute here. What if this is, all in all, in the grand scheme of things, a bear flag pattern? Sooner or later, we're going to flush down and lose 196.5 as support. The bear's argument will go out of the window if this chart closes above 204.5. And you'll know that right away if the chart starts trading above 202.5. Moving on to the Dixie, another important indicator. Dixie goes down, equities go higher. The Dixie was overbought to begin with, but you couldn't play the game of calling the top because it kept going on and on and on. But now we have a reliable signal. The Dixie has topped, at least for now. But remember, after all, this is tricky Dixie. It might show that it is dead and it's stopping, and the next day it reverses all of that and it pops higher again. So we have to wait for the confirmation of the confirmation, because this is not a usual chart. This is tricky Dixie. What about gold, the daily chart? We have a reversal right here in gold, a massive down day. And this is not bad news for the gold bugs, by the way. This is good news. You're taking the fluff out. Matter of fact, the bulls actually want a retest to the Fibonacci level at around 1,925. And then we bounce again from that point on. What you don't want to see is another pop higher by tomorrow, because that would say that we're still in overbought conditions. We will see a bigger drop coming sooner or later. What about the 10-year yield? What's going on here? A pop higher. We're now facing the resistance at around 1.94. All eyes on the CPI. On one hand, you have the momentum indicators curling their way higher, indicating more gains to come for the 10-year yield. On the other hand, who's to say that this is not a head and shoulder formation? There is still the potential for that, absent of a closing, a weekly closing above 1.94%. Why did the 10-year yield pop higher today? Did it pop higher based on good news from Russia-Ukraine? Absolutely not. Did it pop higher based on inflation expectations? Not really. My reading today is the 10-year yield popped higher based on growth expectations, because crude oil was down and the chart of the 10-year pretty much breathing a sigh of relief, saying, okay, perhaps the worst of stagflation is not going to happen. The problem is oil pops higher again and the chart has to debate. Does it go down or does it pop higher again based on higher inflation expectations? But you can decode all of these moves by looking at the high multiple names, specifically in the NASDAQ, what they're doing. If the 10-year yield is popping higher hand in hand with these high beta, high multiple names, then we have higher growth expectations. If the 10-year yield is popping higher, while the NASDAQ is dropping down, specifically the high beta names, the high multiple names, then we have a pop higher, the 10-year, based on higher inflation expectations. It sounds complicated, but it's really not. Grab a pen and paper and write the scenario analysis. 10-year pops higher. What is the NASDAQ doing? What is crude oil doing? You do these scenarios and you can find out exactly why the 10-year is popping or dropping. What about the TLT weekly chart? Again, bad news for TLT bugs. It was looking good. The volume was higher last week. 140 was in the bag. The RSI was curling higher. And now look at this. But the hope is not dead yet for the TLT bugs. The hope will be dead once you lose 134.5. But for now, who's to say that the CPI will come out hot, cold, medium rare? Who knows? And the bond market will interpret it one way or the other, and the TLT could pop higher again. So that is still a possibility absent of losing 134.5. What about the VIX 4-hour chart? What's going on here? Obviously, the good news for the bulls is the following. We're talking about market bulls, not the VIX bulls. The VIX lost the support of 33. That's number one. Number two, we have red impressions of the histogram of the MACD. This is a confirmation that the pop is over in the VIX, at least for now. The bears would argue and say, look at this. We have yet to make lower lows in the recent pattern. We are still trading above 20 by a lot. The divergence in the MACD indicator between the white and blue line is not that wide. Another pop in the VIX, and the MACD curls higher again. Market bears could also argue, look at the daily chart. Look at the weekly charts of the VIX. They're all indicating that the VIX will pop higher. So whatever we're having right now is a dead cat bounce. What about the VXN? What's going on here? 4 hours chart. Again, it failed to make a higher high. But did it make a lower low in the recent pattern? The answer is not yet. So we have one signal indicating that this is good for the Nasdaq bulls, but the confirmation would be making a lower low. On top of that, the MACD indicator is curling its way down, but it has yet to produce red impressions in the histogram. So who's to say that the VXN is not going to pop higher again, and the bulls will eat a pie in the face? The bulls will have the confirmation once we have a lower low and a negative crossing in the MACD indicator. What about Apple? We have a bounce of 157. The volume is a little higher than average on the buying side. The momentum indicators remain in negative divergence, but there is some progress today. Could it be a dead cat bounce? Certainly could be. We could reverse, close the gap, and trade below 157 again. So you're not going to breathe the sigh of relief that this is over until the chart recaptures the upper edge, the upper range of the channel in yellow that is acting as resistance right now, secures that as support. Then you'll have a pattern of a higher low, and the chart will be eyeing 172.4 as resistance. What about Tesla, the souffle? We have a sloping line of resistance and a bull flag pattern. The bull flag pattern played out today, so where is the next resistance? Here it is. Resistance number 1 at 866.14. Resistance number 2 at 886. Resistance number 3 is the trend line in yellow. We'll extend that when we get there. But for now, so far, so good for Tesla. The problem is, you're still trading within a range, and this range has been going on since last month. So all in all, no progress in the souffle. What about Bitcoin? Tulips. A massive pop higher, and of course, the dummy media. It was absolutely absurd today. They attributed the pop in Bitcoin to the regulations by the Biden administration. Are you insane? So did the German DAX also pop higher based on the Bitcoin regulations by Joe Biden? How about Apple, Amazon, Microsoft, financials? All of these popped higher based on the crypto regulation of Joe Biden? Of course not. Today, it was the tide that lifted all boats. For all you know, the next day, Bitcoin drops down again. And what happened to the regulations optimism? If anything, regulations are not good because they happen to be restrictive. Lastly, what about AMC apes? What's going on here? We've been playing the oversold rally, and this has been a good trade so far. But today, it's over, it's gone, you close it, at least for me, because we're seeing weakness in the momentum indicators from an hourly perspective. And what if this is yet another bear flag pattern? Sooner or later, we're going to break 14.24. Now, I could be wrong, but the apes better move this chart higher by the end of the week. We got to see an 18 handle on AMC by the end of the week in 2 days for this chart to be out of the woods. And lastly, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have the initial jobless claims for the week, but most importantly, the CPI, aka the CPLI, and then we have household wealth. And by the way, there was a lot of propaganda on Twitter. It's absolutely shameful and disgusting. For example, you have CNBC's anchor Carl Cassidia, who's tweeting that the increase in oil prices don't mean anything at all because we can afford it. Why? Because it's only 2% of household wealth. Are you that stupid, really, Cassidia? When you lump me, Bezos, and Musk, of course, our household wealth is to the moon. And the increase in gas prices means nothing at all. You take Bezos and Musk out of the picture, it looks drastically different. So please, don't fall for the propaganda. A lot of propaganda out there to cover for the failure of this administration. And again, I'm not partisan at all. I criticized the red cult when they were in power. I'm now criticizing the blue cult because they are in power. You gotta have a set of principles and guidelines, and you stick with those. You don't swing one way or the other and do propaganda based on your political biases. Do you have principles and guidelines or not? And you stick with them whether it benefits your cult or not. Otherwise, you're just a brain-dead zombie. Anyways, lastly, on the economic calendar, we have the federal budget deficit. And with that, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.